Hey, what's up, guys? I had a question from a subscriber. He was asking about how to look appealing to a mortgage company being self-employed. And it's something that we all eventually will run into, if we're looking at financing, a truck, a piece of equipment, or in particular, what we're talking about in this video is a house. And I'm going to tell you, I've went through this recently here with our home build. I'll try and throw up a few pictures of that just to kind of show you guys where we are at in that process. But in this video in particular, what I want to talk about is what you need to do to look appealing to a mortgage company, to a bank, because I'm going to tell you, man, we have a whole different set of hoops to jump through on being self-employed than just a standard, paycheck W-2 employee. So with that being said, I've made a list here of some things that helped us get qualified and some recommendations that if you're looking at, getting finance for a home mortgage, these are things that you really, really need to have lined up. You need to have all your ducks in a row with these things. Let's jump into it. Okay, before we even get going, I want to just say this. Whenever you are preparing to look appealing to a mortgage company, or if you think you're going to be buying a house, this is a process where you need to be setting yourself up years in advance, okay? And that is not an exaggeration, unless you already have all of these items locked down and squared away, you need at least 2 years of doing what I'm about to tell you to make yourself even qualify many times for a home loan. So that being said, before we even jump into these items, you need to understand that it's not something that you're just going to fix in the next month or two and then you're going to look great on paper to a bank. It doesn't work like that, man. You really, really got to prepare yourself. And I would say prepare yourself over a year or two getting ready. If you know you want a home loan, start a year in advance getting all these things in order. Okay, the very first thing that I would mention, and these are in no particular order, guys, but these are the things that the bank wanted to see on paper and they wanted proof of all of it. The very first thing is you need to understand what your debt to income ratio is for your household, okay? And without going into a complete tutorial on debt to income ratio, it's DTI is what it's called. And what that is it's basically the expenses that you have that are on fixed payments, your installment loans, credit card debt balances that you're paying each month compared to your gross income, okay? That's on a monthly basis, okay? So for example, if you had $2,000 worth of expenses every single month and you had $6,000 worth of income, then your DTI or your debt to income ratio would be 33%, okay? And what do banks think is a good DTI, okay? I'll tell you that most banks, the max debt to income ratio that they are going to allow somebody to borrow from them is going to be 36% DTI, okay? So what you can do is you will take your gross monthly income and multiply that by 0.36, and that is the most. Like that number that you come up with, like if it's $10,000 as your monthly income and your DTI at 36% would be $3,600, that is the absolute most money that the bank says they are comfortable giving you a home loan up to. And guys, that is including everything, not just the mortgage payment, okay? So that's your vehicle payments, that's your credit card debt, that's your student loans, any personal loans, and your mortgage has to fall somewhere within that $3,600. So that brings me to my next point is whenever you are trying to clean up your debt to income ratio, you need to have like almost zero expense, unless your income is like super, super high. Man, if you're wanting to get qualified for a mortgage in today's world, I mean, you either have to have a really, really high income or a really, really low amount of debt that you are servicing every month. And ideally, of course, you would have both. You would have a high monthly income and then a very low debt payout every single month. So again, the thing that I want to stress about debt to income ratio is that number at 36%, that number, it includes all of your expenses. That's not saying that just because you make $10,000 in income a month that the bank is going to give you $3,600, towards your mortgage and your housing expenses. Okay, that is the top limit of what the banks are comfortable loaning you, depending on how much debt you're servicing in all. So $3,600 would be the max. So to clean up your debt to income ratio, again, you want to get rid of credit card balances. You want to get rid of installment loans, vehicle payments, anything that is eating up monthly income in the form of debt that you are servicing. You have to get rid of that. That is the number one most important thing that you can do, is get rid of any and every bit of unnecessary debt that you're servicing each month. Number two is you need to have cash reserves, okay? And and I'm not just talking about for the down payment. Ideally you would have a 20% down payment, but what the bank wants you to have is not only the 20% down payment, and again, that is to get their best interest rates. The bank not only wants you to have 20% down, but they want, at least for me, they wanted a full year's worth of mortgage payments sitting in an account in the bank. Meaning that if your mortgage was $3,000 a month, they want another $36,000 just sitting there, saying that, hey, if anything were to happen to my business or my employment situation, well, I could pay this loan for a full year without any type of other income, just because I have this money sitting here. They want to see a history of those funds in the bank. Like, they don't want to see 6 weeks prior, you all of a sudden have $40,000 in the bank. Where did that come from? How is it sitting there? They want to know that you're managing your money well, that you have enough money for a good down payment, and that you have a year's worth of expenses sitting in the bank. Okay, so again, to summarize point two, you need to have the funds set aside for 20% down if you want the best rate for your interest rate for your loan. Plus, you're going to need 1 year's of payments sitting aside in a separate account that makes the bank feel comfortable. The third thing that you need to do is you need to clean up your credit score. If you have a credit score, anything under 700, you're not getting the best rates, and really you need to be in the mid sevens and on up from there to receive the best rates from the bank. And guys, those little tiny percentage points, they just add up to thousands, if not hundreds of thousands of dollars over the life of the loan. And again, it may not seem like a big deal up front when you're just talking about half a percentage point or a percentage point, but it makes a huge difference in your monthly payment. So what I did was I went on to Experian.com and I went and looked. So my family, we've never had a credit card. Okay. That's just, I know some people use them with great success, but without saying all the reasons that I don't use them, I can just say that I don't want to be a part of that system, because if somebody is winning with a credit card, it's because somebody else is losing. I hate the whole system. I don't want anything to do with credit card or credit card companies. That being said, we've never had one, and that actually hurt us a little bit by not having what's called revolving accounts, credit card accounts that are revolving accounts. But what did help us was my length of paying my other mortgage, my debt history of making vehicle payments and that type of thing. So I would say go on to Experian, get your free credit score, and then look through there, and you might find something in there that's surprising to you. For me, I had a collection on there that I had no idea about. And what that was from is I had an alarm company come in and say, hey, if you will buy our product on a monthly basis, we will do the install for free. The guy sat down there, right at my kitchen table and shook my hand, and lo and behold, they did the install, and the next month they sent me a $900 bill for the install. And I was like, y'all literally said that the install was free if I would sign up for a monthly contract. And they was like, oh, we don't know nothing about that. So I was like, look, I'll never pay this. Like, your salesman just lied to my face about it. So they ended up sending that to collections, and I had no idea about it, but it was there on my credit report. So we ended up actually having to pay that off just to have really crystal clear, like squeaky clean credit, okay? Both mine and my wife's is well over 750. So we were able to qualify for the best rates. And again, by just doing due diligence up front and monitoring our credit score, it just kept there from being any major surprises by just getting ahead of that curve. The next thing is you are going to want to work with a bank who specializes in giving loans to small businesses or self-employed individuals, okay? I met with one bank, and I say this with the utmost respect, the people who were writing the mortgages, who were deciding whether or not you would qualify for a loan, they did not understand how to read a profit and loss statement, meaning that they were not able to decipher where the money was in the business. They just looked down on net income for the business and see a net income of $25,000 or $30,000, and that's all they were wanting to give us credit for. They did not understand that your Section 179 deductions, all your depreciation that we were taking, we had $80,000, $90,000 just in depreciation in several items that we had purchased. We had 179 deductions that we were taking out. There was just a lot of add backs, shareholder distributions, money that I took out of the business and paid myself for. None of that stuff they were counting. And again, I say this with utmost respect, but the people who were making these decisions, they had no freaking clue what they're looking at. And it was astounding to me that they are the people making the decisions of whether or not people can qualify for loans. I was like, well, I need somebody who can actually read this profit and loss statement and can understand what's going on here. So come to find out, while I assumed all banks had the ability to do that, they don't. And I ended up getting in contact with the next bank that was recommended to me by another fellow business owner. And it was like night and day difference. They were able to give us all of our add backs for all of our depreciation that we took, shareholder distributions, Section 179 deductions, all that stuff that's just paper expenses on your profit and loss statement. We were able to get our income back. And that was the deciding factor for us, because again, we make really good money. I have super, super low debt. We have no debt other than my truck. That is the only thing that we have. And the only reason that I haven't paid that off yet is because my accountant told me not to do that. So we had super, super low debt. I have a really, really good high income. My wife makes good income, and we were in a great position. But we were having trouble getting finance with the first bank, and then it was much easier, better process with the second bank, because that second bank specialized in working with small business owners. So again, you will need to do some research in your area and see what banks specialize in working with small business owners. But it is something that you absolutely have to have. You have to have a bank who understands how to read a profit and loss statement. Okay, guys, and the fifth and final tip that I would give you is that the bank that you work with, they are going to want to see 2 years tax returns, okay, for your business and personal. So you need to, and it leads me to this next point. For point number 5, you need to have a folder, okay, a dedicated binder with your family and your business's financials ready to go, okay? And that's not just for this mortgage. Just in general, if you want to get finance for an auto loan, or if you ever need to look in your books, just take it from me that having a binder with 2 to 3 years worth of tax returns, profit and loss statements, business balance sheet, cash flow statement if you're into that, your debt to income ratio, even if it's in a spreadsheet, just having all this stuff in a binder that's organized. It's your family's finances. You need to know where you stand at all times. And whether, again, if you're just starting this, and it seems like a lot, but I promise, if you will just start building this binder up, I cannot tell you the amount of clarity and confidence that it will give you, and it just sets you on the right track, because every decision that you make, you're asking yourself, how does this decision that I'm about to make for financing this or taking this debt on, how does it affect my debt to income ratio? How does it make me look here on paper? How does it affect our balance sheet, my wealth, our family's wealth? It makes you think differently. But just having this binder ready to go that is a snapshot of where you're at, and having at least 2 years in there, again, the bank is going to want to see it, man. They're going to want to see 2 years tax returns, profit and loss, balance sheets. They're going to want to see your cash reserves. They want to see your bank statements over the last 2 years. They want to see everything, man. If they're giving you $1 million loan, or $500,000 loan, or whatever it is that you're wanting to get, they want to know that all of their T's are crossed and I's are dotted, okay? And the way that you set yourself apart is by having all these things ready to go. Like, you don't go to a bank, and ask them for $1 million and, well, what do you need from me? No, that's dumb. Like, that's a very dumb thing to do. Like, you don't even go to the bank and ask for $500,000 and say, well, what do you need from me? Like, no, that's dumb. Like you're asking them for $500,000, dude. Like, you need to have your crap together. Like, you want banks to be fighting over who gets to get your business. That's the mindset you need to have, not hat in hand, just hoping that the bank will give you some money. And I hope is in this video, I hope the point that you take away is you need to be proactive. Like, if you're wanting to get a construction loan or a home loan, you need to be proactive. And you need to take charge of your family's finances and your finances. And one of the best things you can do is by all the things that I've said, but just having a binder ready to go, knowing exactly where you and your family stand. Okay, guys, so to summarize, you need to have a very low debt-to-income ratio. Most banks do not want anything above 36% on the debt that you are servicing total. You need to have cash reserves on hand, ready to go. 20% down payment plus a year's worth of house payments ready to go to get the best interest rate. You need a very, very squeaky clean credit score. 750 and above is best. 4, you need to work with a bank who specializes in giving loans to self-employed or business owners. And 5, finally, you need to have a binder ready to go of your family's finances and your business's finances. Not only will this make you look super professional to the bank, but it'll just provide confidence and clarity to you and knowing where you stand in your financial picture. Guys, we have been so blessed. I would have never thought in a million years, that we would, be building our dream home on 5 acres and much less being, qualified as self-employed people to do this. The requirements are extremely stringent for self-employed people because it's a lot more difficult for the banks to ascertain if you are really, really looking good. It's a lot more difficult than just handing them a W-2. There's just a lot more hoops that you have to jump through. So you really have to do due diligence on your end and be proactive to look appealing to the bank. Guys, I hope that helps somebody out there who is either wanting to purchase a home or who may be thinking about building a home. Those are the things that we did that allowed us to get set up, to get the loan that we did and have our dream piece of land and our dream home being built. Y'all take care. Hey guys, if you'd like a little bit of extra help in your lawn care business, maybe you're not ready for a full-blown Turf Pros Academy thing, there is a free download, how to make more money immediately in your lawn care business. There's a lot of money hiding in your lawn care business. Got a lot of great feedback on this free download. I'll post a link for it. Check it out. I think you'll find it really interesting.